Welcome to this week's Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. Good evening, Rob. How's everything?
Not too bad.
All right. We're here in September, post-Labor Day. Everyone talks about the gloom and doom for September. So let's see what the stats say and what do you see from your perch?
Yeah. Well, we had an interesting, week there before the start of this month, as we kind of rolled over from that Friday, and then kept going. So I think the seasonality went pretty much as expected for the end of August. I mean, because we had such a big launch on the Thursday before the 5-day windows, the 5-day window was starting on Thursday, but it used up all of its energy there. And so then from there, it was just kept pulling back. And then the first day of September also supposed to be down. And then the first Friday of September, performance was pretty benign. So, it checked all their boxes. I really like having a seasonality perspective, even if there are other, counterweights and catalysts and other things to consider. I just like knowing what's kind of normal. What would happen if these other things didn't interfere. And sometimes the seasonality still wins out even with other, catalysts. But if you can get them lined up in the same direction, seasonality plus a catalyst, then you're canoeing with the flow of the river, right?
Correct.
So let's just take a little run here at the futures. It's been an interesting last 2 hours here since, last 5 hours since they opened. They've been bouncing around quite a bit. So the Dow Jones, the thing is, these things were way up right when they opened. We rallied, and we've come. So when I read off these numbers, we've already come off the highs significantly, right? So the Dow Jones futures right now are up 144 points, or 0.46%. S&P's up 19.75 points, 0.5%. NASDAQ's up 82.25, or 0.68%. And Russell's up 14.7, 81%. Now, the VIX is been dropping here a little bit from the high that we had on Friday. We've got China stimulus happening. So they've gone the way of zero tolerance, locking everything down. And now they're having to put in a lot of stimulus into the economy to make things work, I guess. And we've kind of seen that movie already. We've been through it, and now we're in a time where stimulus is kind of over. And September is an interesting month for the Fed because there's an aggressive quantitative tightening. So they've been a little bit behind schedule through the summer. So it's going to hit here in September and October quite aggressively. So we still have rising rates, and plus we have the QT. So the backdrop is not looking that good on a macro basis. So it's always surprising how bullish the market likes to start pre-market or at the open, and then we sell off, right? So here we're going into Tuesday, which is a shortened week. And we're seeing that the futures are up ahead of that. So we'll see how they are pre-market. But we've seen this movie before, too, where futures are up pre-market, market gaps up. It was amazing on Friday. I mean, the average gap on all my list was like 1.38% for the stocks, right? And then immediately, everything sells off, right? Fills the gap. So I love those kind of days, but we'll see if we get another one like that. So normally in September, there's not much cause for excitement until the last week of September. So why don't you rattle off a few things there?
Yeah, what I got here is since we've passed the beginning of the month seasonality, that first Friday, the first day of the month, and we're still kind of early for the mid-month seasonality and options expiration. It's kind of a gap week here. So I thought we'd focus on the monthly seasonality for September. So for the entire month, what ETFs or what indices might be advantaged or disadvantaged. And so for the entire month of September, the SPDR is expected to do minus 0.19. And that's about the same for the diamond. So the Dow and the S&P expected to be slightly down for the entire month of September. The Qs are expected to do slightly worse, minus 0.27%. And one that's better is actually the small cap. So IWM, the Russell 2000, that's expected to be pretty much break even, minus 0.002. So we might be able to see some plays of Russell stocks outperforming some of the mega stuff. And it's also seen in the big cap stocks themselves. So I looked at the mega cap stocks, Apple, Google, Microsoft, Amazon, Tesla, Nvidia, to see how they would do on the month. And they actually perform quite worse than the average themselves. So Apple, minus 1% for the month. Google, minus 0.95. Microsoft, minus 0.47. Tesla, minus 2.3%. But Amazon's up slightly, 0.44. And Nvidia is up 3.1%. So some of these mega cap plays from the short side might be good, and some of the smaller stuff might be a little stronger. And then within the ETFs themselves, basic things that are stronger would be basic materials, XLB. Financials are flat for the month, XLF. XLI slightly positive, 0.88% for the month. And discretionary, XLY, positive for the month. And chips, SMH, 1.59%. So that was seen in Nvidia and in the SMH. And then the ones that are weaker, XLC minus 2%, XLE minus 1.25, XLK technology minus 0.23, staples down minus 0.31, utilities, healthcare, real estate down big minus 1.99, and ARC minus 1.66. So it's kind of mixed there, but there are some little bits of glimmer of things that might do better than others. So check out the monthly seasonality dashboard on the StockOdds website. And those are just some of the themes that I saw there. And then we have some economic data, nothing big though. Tuesday, there's ISM Services Index. Wednesday, some Fed speak and the Beige Book. Thursday, initial jobless claims and consumer spending. And then Friday, wholesale inventories and a couple more Fed speakers here and there. So that's the backdrop to the week. So yeah, let's see what happens.
Just a reminder that the fall season, especially in an election year, there can be a lot of mergers that are attempted to there wouldn't be consummated yet, but they would start. And plus we see a lot of challenges in the economy, different companies struggling. And so that argues for it as well. We have one that was announced here today. We have CVS going to buy Signify Health. That's SGFY. So CVS is the ticker, buying SGFY. That's a $8 billion deal. It's all cash. So, generally, if companies don't want to dilute and they do have the cash on hand or they can raise it fairly low cost, then and if they're feeling that the market has been discounted, which I think that would be the argument this year, that it's better to use cash. Mm-hmm. So that doesn't mean it's that tradable. There is a certain way that you can trade deals. Like you have to be a bit creative with how you do it, but they can be traded. But the better deals are the ones that are stock for stock, because then you have this contractual relationship. You have a fixed ratio of stock and stuff, and it's a much easier to trade like you would a pair. But in this case, a merger is even more tied together than a pair would be. Mm-hmm. So just a reminder for the fall season, and there's a lot of stuff to come out yet. I mean, we're seeing, weather is being a problem. Civil unrest is being a problem. Inflation is still a problem. And I don't think we've seen the last of it or the worst of it yet. So I think we have to be, pretty shrewd here with, and that's why we started, we had a long only list going from, we were doing long and short in April and before. We started a long only list kind of at the end of April, and that would be long the stocks plus hedged with, either sector ETFs or market ETFs, or your choice is to, go just with the stocks rather than hedging. But we're going to do long and short ideas, and the reason is that that's how we normally trade, because on down days you need your shorts to have the same volatility opportunity that your longs do, or better yet, if your shorts have even greater potential to decline than your longs. And the problem with some down days, when you're just doing the ETF, it's already statistically muted, so it doesn't give you proper coverage unless you're willing to increase the amount of capital on the hedge, towards beta adjusted and more, to compensate for, the type of day. So when you have long and short ideas both, this gives you tremendous opportunity to, sell a gap day on the upside. You have different things you can do. You could, sell an ETF and wait for it to pull back, then buy your long stocks, or you could sell your basket of short stocks into the gap up and, wait for them to pull back. You could cover them and lock in profit, or you could buy your long stocks on the pullback. You could have the market ETF still standing by in case you get caught. So it just opens up a lot more opportunity to, wisely execute. And that's a big part of basket trading, is tackling each day, not just with the ideas of long and short, but how do you execute? A flat day is very simple. You just want longs and shorts, right? A gap up day could look different. You may not want to buy some of those longs that are gapping up, significantly more than the market ETF. Because what happens, like on Friday, like everything that gapped up pulled back and more, right? So had you only done shorts on Friday, you'd be golden. Easier said than done, but that's the message I want to drive home, that it's really about executing, right? Mm-hmm. So, anything else on the news front? Oh, we mentioned China stimulus. I mean, that's pretty big, and especially if you are trading anything that's sort of in the small cap space, sometimes that really responds. If you're trading anything that has China exposure, sometimes that really responds when, kind of the same thing as our markets did. When we came out of the hole with COVID in 2020, it was the stimulus that was really giving people a confidence that they could go into the market. And that's where a lot of the stimulus money ended up, was in the market too. So that's not necessarily good. That creates bubbles and things. But anyway, China's going to do more stimulus. So, okay.
And the Nord Stream shutdown into Europe, the natural gas. I mean, but natural gas is actually down this day.
Well, yeah. I mean, oil's up because this, pathetic little, little thing with OPEC. I just find this whole area quite humorous and not so humorous at the same time. But So yeah, oil's up a little bit on that this afternoon here. Let me see here. I'll just checking it again here. So it's up West Texas is up 178, so 2.05%. And Brent crude is actually down slightly. So West Texas is responding better. Gasoline is up a little bit. But you're right, natural gas is down 1%, right? What's happening in the currencies? We've had such a strong US dollar. Now, on Friday, it did pull back slightly. Well, actually, Friday was an inside day on the US dollar. And then today, we did pop up a little bit and then pull back. So with the futures. But the euro has gone through the dollar there, eh?
The 99 cents.
Yeah. So still not a case, still not a case for gold and silver. And I mean, they are popping up a little bit the last couple of days, but we just really, even in the declining week we had, they weren't responding.
Mm-hmm.
So, I mean, this is the recession thing for copper. But, if there was a lot of fear and panic, you might see a little bit more out of gold. I guess the US dollar is the one that's got the leadership on the defensive posture for now. And until that stops, it's pretty hard for these commodities to really rally with a strong dollar. It's just, historically, I've seen that. It's very, very tough. But if the dollar does start to pull back aggressively, we've mentioned this on the show before, then I definitely would pay a lot more attention to those commodities because they should pop.
Yeah. And the 10-year.
Well, anything else?
Well, the 10-year, it's at 3.22 now, so it's come up quite a bit since August.
Yeah.
It's up a little bit today as well.
Well, I think we're more focused now on that 3.8% target, and then obviously staying up there longer than people would have expected. I think we're factoring that in. Doesn't mean the market's happy about it, but I'm still. September and October are very treacherous months. I mean, when a lot of bad things happen in these 2 months historically, so keep that in mind. I don't know if you saw Benjamin Netanyah's tweet, but he said Israel's been on the defensive concerning all these things that are going on in the Middle East there. Mm-hmm. But as of November 1st, he said Israel will move to the offensive, no longer playing defense. So just think what that might mean. This, like I said, civil unrest is becoming a hotbed around the world, many, many countries. And we've got, everything's political nowadays, right? Mm-hmm. All the governments. And I mean, I was looking at stuff from Brazil. My daughter's in Brazil. And, Supreme Court overturned president on a lot of issues, and also blocked his social media now, Instagram, Facebook, and Telegram's banned in the whole country. Mm-hmm. So, the Supreme Court's gone bonkers there. I mean, basically, you're looking at it moving towards a dictatorship. Mm-hmm. So it's democracy is being challenged on all fronts, my friend.
Yep.
So we'll let you go. Have yourself a good night and good preparing for tomorrow, okay?
All right. Good luck. Thanks.